Yo, 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 what's up? Welcome to a brand new episode of Philosophy Culture. I'm here with my dude, podcast broadcast. What's up, bro?
What's up, Emils? And I'm here as always, as you know, with my podcast bro and big dude Emils.
That's me. Yeah, so today we will talk about real estate. And yeah, this has been an episode a long time in the making, but we finally figured out how me and Carsten want to tackle this. So yeah, we are ready. Somewhat. And yeah, Carsten, what will we talk about even more?
Yeah. So as you mentioned, we will talk about real estate and some categories of real estate such as residential real estate, commercial real estate. But we will also briefly go through on some strategies on how to invest in real estate.
Hell yeah,
So
hell yeah.
yeah,
Check it out.
check it out.
All right, so real estate talk.
Oui, oui, monsieur.
Yeah.
Yeah.
Très bien, très bien.
Yeah, I think this one will be kind of interesting because we haven't had any pre-talk before this episode. So it will be interesting to see what you have concluded compared
Yeah,
to
yeah,
my,
yeah, yeah, yeah.
yeah,
I guess so. I guess so.
compared to my notes. Yeah. Um,
So okay, let's start off with the classic question then. Why do you find this episode to be important, or this topic?
yeah. Well, I find it very important because there are so many people using real estate as a part of diversifying their portfolios, right?
Yep.
Their investing portfolios. And since we are in this investing quarter, I think it fits very, very well. Um, and yeah, when you think about it, real estate is such a big market, or yeah, such a big, yeah, I could call it market. Um, and there are so many investors, and yeah, it's just a very important topic, I would say. And everyone needs real estate, and so I think there will always be investing opportunities. Um, and in addition to that, it's also a very good hedge against inflation. Um, so yeah, that would be my opinion, briefly. So
Yeah,
yeah,
yeah.
how about you?
All right. Yeah, well, I have the same thoughts as you, and then I would add also that, damn, what did I think about just now? Real estate, it will always be around, and yeah, and it's also said that it is a pretty good, pretty stable investment. Also, of course, there are risks, as with every kinds of investments, but um, it has this reputation that it is pretty stable, and it makes sense also. And and also we live in the houses, like, and I feel like it's perfect to also know how the house market, so to say, really works, since we live in the most of us who don't live on the streets, like we live in some sort of real estate, right? And some sort of uh, house, apartment, and all that is under the real estate umbrella. And yeah, it will be fun to talk to you about this topic and learn more about it, and yeah, share with each other what we have learned. So yeah, that's kind of my comment on that.
Exactly. So should we first start with going through the categories of or types of real estate? and then
Uh,
maybe briefly go through on how to invest in real estate.
as you wish, monsieur.
Doesn't matter to me. But I think an interesting way of structuring it would be that we go through the different types of real estate, and then we go through the investing, like how you could invest in real estate, like the different
Yeah,
types of doing it, because I think it may vary depending on different categories.
yeah.
Um, so yeah, so yeah, let's start with
Sounds good. Yeah, sounds good to me.
yeah. Um, but good. How many categories? How many categories did you find? Of
So I have five.
five. Okay.
Yeah. How many do you have?
I have four, but I could think of five.
Okay. Okay.
If
All
yeah,
right.
if you want to put it that way. So
All right.
cool. Which one would you start with?
Okay, then we can start off with residential real estate since I feel like it is the kind of most common, right? Since
Yeah.
we all live somewhere, so it's residential, I guess.
Yeah.
I guess that's the I don't know how close I am, but I guess that's kind of the definition of the word residential as well, since you reside, right?
Yeah.
But yeah, so under the residential real estate title are properties like single family homes, condos, cooperatives, duplexes, townhouses, and multi-family residences. So actually, I haven't done my homework enough since I'm not sure what condos are. I I guess those are like
I think condos are a abbreviation for condominiums, which is also some sort of housing. I don't know how I should.
yeah. So we have condos, cooperatives, duplexes, townhouses, and multifamily residences. So I assume at least duplexes weren't those like the houses that have like two apartments that are like besides each other, no?
Yeah, it's like one house divided into split into.
Yeah.
Yeah.
Right, right, right. So
Uh,
those are duplexes. Um, yeah, cooperatives. I don't know what that is either. Damn it.
it
Shame on
feels
me.
like it feels like it feels like there could be different definitions depending on which. I think there are different definitions based on American English and British English. If I'm not mistaken. Yeah, I think so. I'm not.
Yeah, yeah, it could be so for sure.
Yeah. Um. Yeah. So a cooperative. Yeah, I found a cooperative as a sort of apartment which is shared by. It makes sense though, which is shared by different owners. So that would be like let's say that like four persons buy a 4 room apartment and they just split it.
Okay, okay. Because what I found on Investopedia is that a co-op is a way to own a primary residence, but to where homeowners don't own their units outright. Instead, each resident is a shareholder in the co-op itself. So I guess that's the same thing that you said.
I think so. Yeah.
All
Good.
right,
And
all right.
what would be the pros and cons of investing in residential then? Or what would be the pros and cons with residential from a investing perspective? Let's put it that way.
Residential. Well, the pros are that you get like a stable, recurring income, right? If you are the landlord. Some cons would be that you have to deal with the tenants, which that sometimes can be a bit messy to deal with, depending on the tenants, of course. But it always poses some sort of risk, since they can inflict damage on the property and so on. So I guess that's a
Yeah.
con. Yeah, I don't know. Do you what do you think of?
I would say the pro of, residential uh, property would be residential estate would be that it's easier to get a loan from a bank to actually purchase it because you usually have to put down a certain amount of the price, right?
Down
Like
payment, yeah.
down payment, yeah, 20% or something. Um, and so if you buy something, yeah, I mean, most of the residential, or I would say some, or yeah, like a good part of the residential estate is affordable uh, to 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 a big amount of people. When if you make a bank loan and so on. So I think that would be one thing comparing to commercial estate, commercial real estate, which is much more expensive. But which will, yeah, we'll talk about it later, I guess. And then, yeah, you were talking about the cash flow, which I guess is also a very good, example that you will have this reoccurring income, and this passive income. Um, and then some cons. Some cons would be that if you own like multiple residential properties, then you will have to have somebody that is managing it. So I think that would be, yeah, I think it could easily benefit and at the same time destroy your reputation if you don't have a proper estate manager that is
Right.
actually answering and taking care of the billing and so on. Um, and then I think the rents as well. From a video of Chris Crown, I think his name was, he mentioned that when it comes to residential real estate, you you can't just um, put the rent as high as you want or as low as you want because it's based on several factors such as the city or where it is actually and just the market. So it's very dependent on the market itself, and which makes it kind of easy to forecast or to make a, what would you say, an estimation of how much it would be. Um,
Of
and yeah,
what? Like the rate?
yeah, I mean the
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 what you call
rent,
it?
the rent.
Oh, you mean okay, the rent. Yeah, okay, okay. I was
Yeah.
thinking of the interest rates.
Oh no,
But
no. Yeah, I was thinking the rent itself.
right, 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 yeah.
So it's kind of market dependent. And then yeah, and then again you have the tenants and yeah, if you don't find proper tenants, I mean it may take some time and it's kind of demanding to actually find like a proper tenant to rent to.
Yeah, yeah.
Um, so yeah.
Yeah, I have actually like I listen sometimes to this podcast that is called Real Estate Rookies, I think it's called. And I listened to this one episode where this one lady had started like her real estate journey through like I think she yeah, I think she bought a property and she like post or like what you call it, put it out there like on Airbnb. And yeah, I was talking about that, and yeah, she spoke about how it's adventurous to
Yeah.
yeah, to have the tenants at times. So for sure. But then I actually I had like in my notes I had some pros and cons as well, which are kind of generally applied to the real estate's ownership, I guess, since it also differs like what type of real estate it is and so on. But like generally speaking, I think we can mention as a pro would be that when you own the real estate, it offers like some capital appreciation through time, you know, since generally speaking, properties go up in value with time. Second pro is that it diversifies the portfolio. And then as a third, I have it can be bought with leverage. So I guess the leverage they mean is what you spoke about, that you have to put down a certain amount, like a percentage of the cover a certain percentage of the uh property's like price, like as a down payment, and then you uh, let the bank kind of pay for the rest of it, and then you pay the bank the mortgage. So I guess that's what they mean by leverage. And then some cons is that which is actually a pretty good con is that when you buy real estate is it is really illiquid. It's said so it's not yeah, you can't really convert it as easily to cash once you buy it, I guess. And then, as you mentioned, influenced by highly local factors. So, and I guess that also, I'm not sure, but I think it also impacts. Uh, I don't know. I would assume it also impacts like the negotiations with the banks as well, like with the interest rates and stuff. I don't know. I'm not sure. Yeah, that was just a guess, but yeah. And we have requires a big initial capital outlay. Well, in some cases, as you mentioned in the commercial real estate, may require active management and expertise. Yeah, yeah. So for sure, for sure.
Yeah. Right. So, shall we jump to the next one?
Yeah. We can jump to commercial real estate, I guess.
Yeah, exactly.
Yeah. So, what types of property do you have under
Under
that title?
under that title, I would put like hotels, retail, or like property. I would basically put it as, real estate where you could conduct some sort of commercial activities.
Right,
Um,
right.
so that would be, yeah, all kind of, hotels. Uh, Also industrial. I would also put it as an industrial, um, property, like I don't know, factory or just a warehouse. Um, and yeah, retail stores or like retail stores. I would put more like a property where you could perform some kind of retail activity. But yeah, I think you get my
Yeah. Sure.
and yeah. some do you have some pros and cons with that one?
No, actually, like I haven't listed any pros and cons like under these categories, so to say.
You made just a one general for the entire
Yeah, 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 yeah,
real
yeah.
estate
So it's
category.
quite generalized, but we can maybe think of some.
Yeah.
Uh, but I would also like to include like some other types of real estate that are like under the commercial real estate title. Um, and yeah, I would just kind of read what I copied from Investopedia. So we have any property used exclusively for business purposes such as apartment complexes, gas stations, grocery stores, hospitals, hotels, offices, parking facilities, restaurants, shopping centers, stores, and theaters. So to kind of give to paint a more specific picture.
Wait, apartment complexes.
Yeah, that's interesting. uh, yeah, I'm not sure.
Because
Well,
I would, yeah,
I guess maybe a business could. I don't know.
I would put that on the residential one or the multifamily. Because
Yeah, yeah, yeah.
I can tell you how I have found my sort of categories or what my categories would be. And those would basically be multifamily multifamily real estate, multifamily properties, um, commercial, and then we have short term, and then we have single family. And then we could
Okay.
also add land, of course, uh, as a fifth one.
What do you separate the single family and the multifamily
I would put the
in two
multifamily
separate?
as apartment complexes. That
Okay.
would be like Grant Cardone type of investment.
Right, 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 right.
Meanwhile, single family homes, I would put it more as a, just a simple home, a simple house,
Right.
on a street. Uh, so that would be my sort of differentiation uh, between those.
Well, yeah, but like I don't know. I feel like residential real estate or like yeah, it's more I don't know.
I would put basically residential real estate um, over single family and multifamily. I mean, I would
Yeah.
include those in the residential, of course. Yeah,
Yeah, yeah, yeah, yeah,
yeah,
yeah. Okay,
yeah,
okay.
yeah.
No,
So
it's just like it just sounded interesting. Like you said, single family, then you said commercial real estate. Uh, yeah, well, whatever.
yeah,
Uh, so do you have any pros and cons that you have for commercial real estate?
pros and cons. Well, one pro comparing to residential real estate is that when it comes to commercial, you can, I don't know how the laws are in Europe compared to US, but in the US, according to what I've read, is that you can put up your own price on the rent. So that's where you will, yeah, it's it's much more flexible when it comes to that specific part. And if you somehow manage to increase the rate, I don't know, you make some changes to the building and make it, I don't know, maybe you just add some value to it and increase the rent. That would also increase the price of the building, of the entire property.
Right.
So from that side, I find commercial real estate much easier to sort of scale if or like increase the price of the property compared to residential.
All right.
However, I also think that when it comes to commercial, one very huge benefit is that the deals you close with retailers or the businesses that will use your property are for, I don't know, like a very long time period. So it
Right.
would be like 5 years, 10 years, 20 years, 30 years, if the location is great. Um, and then another benefit would be that um, it's kind of like the business the business that is actually using your property will basically pay their own like uh what do you call it? Will
Rent?
basically
No.
pay no pay their own what would you call it? Cleaning and all kind of
Oh,
uh
the maintenance.
yeah, maintenance and shit, there was a specific word for that. But yeah, but all kind of, those all kind of costs that otherwise when it comes to residential you would have to pay yourself.
Okay, okay.
And it's also
Utilities,
yeah, and it's also a good thing because all of the businesses that you rent to will basically want to make their offices or yeah, offices look good, right? So if you own an office building, they will basically make their own improvements or try to make their own improvements to, make it more comfortable for their customers or clients and so on. Uh,
right.
in some cases, I think that in other contracts that you make, it could be that the owner is actually uh, um, he is oh, I forgot, I just lost the word. He is like he's forced to do all of those changes uh,
Okay.
before the client moves in, for example.
Hmm.
Yeah, and some cons with that. That's a good question. Some
Well,
cons.
you mentioned the larger down payment
Yeah, I was
earlier.
just thinking about it. It's like much more expensive, right, to buy
Yeah.
such a property. So
Yeah.
an average person, I don't think that an average person would be able to afford a commercial property.
Yeah.
Uh, and I don't think the bank would accept it either. Um, so I think that would be like a very big con. And that's why some people choose to start with the residential one, buy maybe 10, 20 properties and then move to the commercial.
Yeah.
Um, so yeah, that's what I would say. Yeah.
Yeah. I don't have any more to add on that, I think. Not yet. I'm just learning about this stuff just now, so hey.
Yeah. Yeah, same here.
It's super interesting for sure.
Absolutely. Yeah, and I got everything from it was actually Chris Crown he's also like a very known real estate investor, I think.
Okay.
Um, he's said to have invested, I don't know, to have a net worth of, or to have invested in, I don't know, approximately like billions of dollars of real estate. Um, but he also had like a sort of mini debate with someone called Dolph. I don't remember his last name, unfortunately. But the thing is that they had a debate because Chris is more leaning towards the residential properties. Meanwhile, Dolph, which was actually his mentor in the beginning, or I think he still is a very, very good commercial uh, real estate investor.
Right,
So
right, right.
it was a really, really good, really, really good episode or video to watch.
Okay, you should send me that one.
Yeah,
It
yeah, yeah.
would be
I
cool to.
I found it like a few minutes before the episode. Oh, before we met, but I will send it to you. Yeah.
All right, all right. But one question though. It's interesting that you brought this up, like this kind of debate between residential and commercial. Uh, right now, my initial feeling is that if you are more invested into or more into the residential real estate market, I feel like you have to deal with more people Whereas if you are in the commercial space, you don't really, I don't know, it feels like it's more passive. I would assume.
Sort of. Yeah, I would think so too.
So
Um,
maybe that's an argument on both sides, or maybe or preference. I don't know. Maybe if you like people, I don't know.
yeah. I mean, from that debate, I got the feeling that residential real estate, depending on how you handle it, could be more complicated than commercial, and vice versa, actually.
Right,
But on the other hand, yeah, like another con with commercial would be that when it comes to office spaces and so on, we saw what happened with the pandemic, that there are a lot of people that there are a lot of I can't speak, that there are a lot of people wanting to move from or wanting to work from their home.
yeah,
So those offices nowadays are more, yeah. I mean the demand for office spaces are not is not as high as it was before.
right,
Uh, but I guess again, it depends on the country, location, and so on. Um,
right. Interesting,
yeah.
interesting. Yeah. All right, all right. Um, then what's your next type of real estate?
I would have short term real estate.
Okay,
Sh-
okay, okay. Explain. What
So
types of
short,
real estate? Yeah.
yeah, that would be basically short term real estate is, as the name says, basically would be like Airbnbs. So properties you use to rent short term. Um, in the sense that yeah, you put it up on Airbnb or yeah, booking.com or other sites and just rent it. Um, so
Yeah, yeah, like it's a type of it's a way you can rent it, right? It's like either
yeah,
long-term renting or short-term renting, but it doesn't really include any specific like real estate, physical real estate, or like some like physical properties.
yeah. If you're looking at that, yeah, from that perspective, sure. Um, then I would put it as land,
Okay.
just land. Uh, that would be my third one in that case. Uh, yeah. Ooh. I don't know what else I should say more about land though.
I actually have land as a category as well.
Yeah.
See, if you want, I can speak or yeah, say some more words about it.
Go ahead.
Uh, so land, it includes underdeveloped property, vacant land, and agricultural lands such as farms. I don't know what this word means. Orchards, ranches, and timberland. I don't know what timberland is either. I just know the artist, Timberland.
I think I was thinking about forests, timberland.
Well, yeah, for sure. Makes sense. Timberland, okay.
What did you say then or the one that you
Or
didn't?
orchards. So it's
Oh,
ORCHARDS. What's that? I don't know. But it's interesting because in the land category, like um, I think in a lot of cases you buy land like well either for agricultural purposes, or then you can like use it for like the resources that are in the ground. Like some, I wonder if mines are included in that category as well.
I think they should be included in land.
Yeah.
Orchards are yeah, well, according to it's a piece of enclosed land planted with fruit trees.
Okay.
I had no idea it was called that way.
With with fruit trees.
Yeah,
Oh, that's cool. That's cool.
yeah. So I had no idea they were it was called that way. Orchards.
That's a piece of real estate I will buy in the future now.
Yeah,
I will
yeah,
just go out in the garden and get my breakfast from the fruit trees, man. Yeah,
yeah.
that sounds wonderful. Uh,
Food production. I don't know why, but I would put that under agriculture. But maybe they were thinking about agriculture as more as a you know
like
coming directly from the soil.
yeah.
You
Like
know,
I don't know, potatoes.
garlic, onion. Yeah,
That's yeah. Okay. Ah, it's so cool, man. It's so cool because like when you go like dive into all these types of rabbit holes that we have like done a little like each episode you find new stuff, you know, you find out what you don't know.
yeah, exactly. That's the beauty of this.
Yeah, I had like a better saying in my head, but it didn't come out as I had thought it would come out, but it still made sense, so
Yeah.
it's okay.
Yeah. All right. So,
You
yeah.
don't know. Yeah. I was like looking at some philosophical things this week. So there was like the saying, you don't know what you don't know. So I kind of wanted to include that, but whatever.
Yeah, no, but that's true though.
Yeah, for sure.
Yeah. Okay, so any pros and cons with that one?
Well, I guess the first that comes to mind is the climate, the weather, like weather, like especially regarding like agriculture. Like if there are like any weather events like floods or something like that that could like impact or like extreme drought that could impact the harvest that comes to mind. Well, so yeah, uh, I guess that would affect farms as well. Orchards, I'm not sure it would affect orchards that much since they are trees, but I'm sure yeah. Ranches and timberland, yeah. Yeah. Mm, yeah, weather. I'm not sure, but I just think of this really powerful pro is that if you like own this type of land, you are automatically setting yourself free from the matrix. So yeah, that you can like you have your own like property where you can grow food out of. You don't have to be reliant on the on the on the on the on the food systems and so on, or as reliant at least. So that is one thing I really appreciate about these types of assets.
Yeah. Yeah,
What
I
about
think
you?
yeah, I think it depends where you are, but for sure, um, that it's a good thing. Um, and I don't know, like a pro would like something good about it would be that if you have like a big piece of land, you could you could, for example, rent it out to to farmers that actually want to use it and use it for agriculture and then let them basically rent it out.
For sure, yeah. That is
Mm.
yeah.
And then another thing would be that if you have like a very big piece of land, then you could like rent it in several pieces or actually sell some parts of it. Um, and then use some parts for rent or like to yeah to rent it out. I think there are many kinds of what do you call it? Many kinds of combinations you could do.
Sure.
Um, and I don't know. I think especially agricultural land is
Hmm.
very important.
For
And
sure.
I don't know. Like look at Bill Gates. I think it was Bill Gates that bought I don't know how many acres of. I think he's the biggest owner.
Yeah, I was just gonna say that, yeah.
Yeah.
Of
Um,
like agricultural land in US,
yeah. So
which is
there,
scary, but yeah.
yeah, so there's something about that. Um, and then some cons would be same there. I think it could in some cases be difficult to get along, especially if there is nothing special about that piece of land.
Yeah.
Um, and you know yeah, the bank wouldn't. Yeah, I mean it depends. When it comes to the bank, I think that if you have a good credit score and so on, and you have some money funds and so on, then I think it would be fine to actually get it, and depending on the price of the land as well. But
Right.
yeah, I think that some properties are easier to get than others, um,
Sure.
depending on the bank's evaluation as well. So yeah.
Yeah. And
Um,
then also I think in some of these types of assets you can even start your own business, like sell
yeah.
your own food and stuff. So yeah,
You know
that's
what I
a
was thinking?
that's a pro as well. Yeah. What are you
I
thinking?
think that a really smart thing would be to buy a commercial or like to buy, let's say, a small commercial space,
Hmm.
open a business, open a business, and then before you sell the business, so you basically sell the business, you don't sell the commercial estate, okay? But you
Okay.
sign a contract with yourself that you will rent the place for like 30 years. So let's say that you own a business.
Can you sign a contract with yourself?
Yeah, let's put it this way. So you have a business, you have a coffee shop, you have a coffee,
Yeah,
your
yeah,
business,
yeah.
yeah, okay. And then
I,
you
I,
have also a
yeah.
commercial, yeah. And then you basically move in there and then you sign a contract with yourself.
Wait, you move in there.
Yeah, I mean, you move. Okay, so let's say, okay, you have two businesses. You have two businesses. Okay. So one which is managing real estate and
Right?
one, I don't know, coffee shop.
Coffee shop, yeah.
Yeah. Or some kind of, I don't know, retail store or whatever. And then you move your business into your commercial space.
Space, yeah.
You basically pay rent to your other business.
Okay.
However, then your business, your retail business, your coffee shop or whatever it is very profitable. So you sell it, but before you sell it, you sign a contract with your property management business where it says that your coffee shop will rent this space for 30 years,
Okay.
and then you sell the business
Okay, so you mean that the new owners of the coffee shop will then pay rent
to your to
uh
you,
yeah.
and that way
Yeah.
you have basically secured like 30 years of rent.
That's a scheme, yeah.
Yes.
Sounds good.
Okay, yeah. Okay, now I was
It's really fun to like think about yeah, all these different like ways, for sure.
I mean, imagine how many how many kind of tactics and
Yeah,
strategies the rich ones have.
for
And
sure.
especially
Yeah, yeah,
if they have access to so many different lawyers and tax clerks and so on.
yeah,
Um,
yeah, yeah, yeah. It's a fun game once you are in it, I guess. Yeah,
yeah. Okay,
for sure.
good.
All right, then I have my last category, which is called special purpose. So this is a property used by the public, such as cemeteries, government buildings, libraries, parks, and places of worship and schools. Yeah. So yeah, I don't know. I don't think I have any pros and cons on that one, or maybe I don't know. Since they are so different, all of them. And property owned by the public. Well, isn't like aren't schools owned by the state?
Yeah,
And also like libraries maybe is a different thing, but
I don't think you can invest in a governmental building
yeah.
like the White House. Or I don't know, but I think
Let's
you,
buy it, Casting.
yeah, exactly. But I think, yeah, I mean, I know that there are some private schools. You could open up your own school. I'm not exactly sure how that sort of process is, but I know that there are some, private schools. Uh,
Hmm.
but yeah, you said what did you call that category? Public?
Special purposes or special purpose real estate.
Yeah,
So yeah, property used by the public.
yeah.
So yeah.
I would say that's more governmental type of stuff.
Yeah, yeah, yeah. It
At
sounds
least.
more like it for sure.
So I'm not
Even though
sure.
even though like libraries, like isn't that a business as well? Couldn't you own like a private library?
I don't know how profitable libraries are.
Well, yeah. For sure.
Uh,
But like if you think just technically,
I mean, yeah, technically speaking, I think you could.
yeah. Well, okay.
Yeah,
That's what's up.
yeah, that's
Then we
what's
have
up.
covered I think yeah, I think the categories that are most relevant. I think in the future we will have like some space property and stuff.
Yeah,
But yeah.
yeah. As I said, like my categories would be single family homes, multiple. Yeah, I can't speak today.
Uh,
Yeah, you
that's
will have to
funny.
beep that one. You'll have to beep that one, otherwise we might get fined. Okay, so single family homes, multiple family homes, long, short-term investments, and commercial estate and land. Well, we
Yeah,
could include three of those under the um, residential properties. Ish.
yeah,
So
yeah,
yeah,
yeah, yeah.
I think those would be it. Yeah.
Yeah.
Okay.
All right. And also a thing that is good to know in case you uh say hose in the future, you can just say that you meant the garden hole, like that you water the plants
Oh
with.
yeah, yeah, sure. Hopes. Yeah. Yeah, that could. Yeah.
So that's an excuse. So I think we will go with that one this
Oh,
time.
yeah, yeah, yeah. No.
Um, yeah.
Yeah. Good. So types of investing in. or like different ways to invest in real estate, right?
Yeah, for
Okay.
sure. So if you want, I can like do a little monologue like for this section. Like I have some notes that I would maybe think it's a good way to maybe start this conversation
Good,
about
good.
investing in real estate.
Yeah, go ahead. Yeah.
All right, coolio. Investing in real estate. So, buying and owning real estate is an investment strategy that can be both satisfying and lucrative. Unlike stocks and bond investors, prospective real estate owners can use leverage to buy property by paying a portion of the total cost upfront and then paying off the balance plus the interest over time to the banks. So, what makes a good real estate investment? A good investment has a high chance of success or return on your investment. If your investment involves a high level of risk, the risk should be balanced out by a high possible reward. Investing in real estate includes purchasing a home, rental property, land, uh, and so on. Then we have also indirect investment, and then we have direct investment. And the direct investment is kind of what we have spoken about. Directly purchasing like a residential, uh, I don't know, single family house. Yeah. And so on. And then indirect investment into the real estate would be like through these REITs, so REITs, which stand for no, I
Real
had.
estate investment trusts, maybe.
Thank you, thank you so much. Exactly. And yeah, those sort of strategies to yeah get your foot into the real estate markets. And yeah, then we also have like different or yeah, I guess we can like kind of yeah start with this like with different types of investment strategies in real estate. I think we can already start off by what you said earlier, like with the short term and um, long term leasing or like renting of the properties. I think that's a strategy that yeah is relevant. So what do you think of yeah short term and long term renting? Like what would be so some pros and cons with that?
Oof. I think, yeah, I think it depends a lot. It depends a lot on like what you actually want to use that property for. And I don't know. For example, if you want to use a property as a summer house, uh, which you go and visit maybe once or twice every second year or something like that, then maybe it's, better to actually rent it through Airbnb and make sure that you have a very good contract with some sort of, let's say, maintenance uh, business that, could take care of it while you're maybe gone or in another city or wherever it is. Um, and then for the long term, that again, like if you actually don't use that piece of real estate, then it's maybe easier to just rent it long term and make sure that you gotta get a constant sort of um,
Cash
cash
flow. Yeah.
flow. Um,
Right.
so yeah, it basically depends, and
For
it
sure.
also
Yeah.
yeah yeah
And
no, and it also depends on what kind of real estate you're investing, right?
yeah.
So yeah, it's yeah, it depends basically.
Right.
And I don't know some
Yeah.
pros and cons with it now. So for example, if we say like cons with or like pros, let's say pros with the short-term real estate, then it would be that you obviously can earn some money while you're not using that property, right? And then you could basically use it whenever you want to, if if it's available according to
Hmm.
your scheme or schedule or whatever. And then some cons would be that, yeah, there are higher risks, of course. So if you put like put it out on like Airbnb and then you have like a a, a football team renting it out, it could uh, get damage and so on. So
Hmm.
uh, yeah, maybe that was a bad example, but of course, I mean, it's one thing to rent it out to one person for like, or like two persons for, let's say 3 years, and it's another thing to rent it out like every week to different persons.
Right, right, yeah.
Uh, at least in my opinion.
No, no, I don't think that's totally valid
Yeah.
point that you are bringing up because yeah, if you have like a lot of different types of tenants that come and live in your house, then it will for sure like bring more damage to the property since the tenants are different people, different personalities, and so on. So for sure, it will accumulate the damage much faster, or the property will accumulate, yeah, much more damage faster. So for sure.
On the other hand, I was also thinking that, if you rent a property per month, let's say you have a fixed rent of, let's say, $1,000 a month,
Hmm.
right? And then you have an Airbnb which you could, for example, rent for $100 per night. And of course, the Airbnb would be much profitable if it's sold out for the entire month
Yeah.
than the like fixed rent
Hmm.
strategy.
Yeah,
Uh, so again, it depends.
for sure. For sure, for sure. Yeah. Then I guess we have kind of, so I have here these four types of yeah, ways to invest in like directly invest in real estate. So or investment isn't really direct, but yeah, we have the ownership, which we have kind of talked mostly about thus far, and the investment or rental properties. Yeah. Yeah. Okay. Okay. We haven't talked too much about like the investing side of it, like the trusts and so on. But we'll go into that. But before that, I think we could talk about house flipping, since it's also a relevant strategy that I feel like, yeah, some people do, where they basically try to find a property that is undervalued, and then they uh, yeah, either sell it directly for more profit, or I don't know, or they make some improvements on the property and then sell it for more profit. And then they kind of keep that thing going, and when they buy the real estate, they don't hold it for so long either, because they try to like flip it as fast as they can, I guess. To it's kind of like swing trading, right, in stocks. I feel like when you try to like just uh yeah, swing your way forward, I guess. uh, which is more time what you call it, uh,
Assuming.
or less time consumptive, I guess. Con s- Less time occupying. I don't know, man. Yeah, it just takes like less time to get yeah, get further ahead, I guess.
Yeah.
which is kind of the benefit of it, but then it also comes with increased risk.
Yeah.
Well, yeah. So do you have any comments on house flipping?
I don't have so many comments to add actually. Um,
All right.
Again, it depends on what kind of investing strategy you're into. And
Right.
I think that, flipping could be risky, as you said,
Yeah.
in the sense that, yeah, maybe you buy a property and you invest in it, you renovate it, and then when it comes to selling, maybe, you know, you won't get back or you won't make a big profit margin.
I don't know. I think those people that like know how to flip houses, I think they maybe will invest in things that
Yeah.
like they know what things like drives up the value on the property. So uh,
Of course, there again, I mean, if you're actually really
but
into, flipping and you know the
yeah,
market, you know the trends, then I think you're certainly, on a good way. Or at least
yeah,
I hope that, you're on a good way. Um, but yeah,
right, for sure, yeah. All right, so then we have house flipping, and I guess we can basically jump into the REITs, right? So we have the real estate investment trusts. Yeah, exactly. So investing in real estate indirectly is done through a real estate investment trust, REIT, which is a abbreviation for that. A company that holds a portfolio of income-producing real estate. There are several types of REITs, including equity, mortgage, and hybrid REITs, and are classified based on how their shares are bought and sold, such as publicly damn it, publicly traded REITs, public non-traded REITs, and private REITs. So we have three types of REITs, right? We have publicly traded REITs, public non-traded REITs, and private REITs. I'm not sure what the difference is between those three. Like, I guess you could get some sort of assumptions based on the names, but uh, non-traded REITs. Do you have any ideas how those would look? Because I assume publicly traded REITs are out on the stock market, right? That you can just buy into, and they will then pay you dividends. I think, yeah. But public non-traded traded REITs, what are those?
that's a good question. Non-traded REITs are not listed on public exchanges, of course. That makes
Yeah.
sense. And can provide retail investors access to inaccessible real estate investments with tax benefits. A non-traded REIT is a form of real estate investment method that is designed to reduce or eliminate tax while providing returns on real estate. It does not trade on securities exchange and because of this is quite illiquid for long periods of time. Front-end fees can be as much as 15%, which is much higher than a REIT due to its limited secondary market.
Okay. Yeah. Well, the most popular way to invest in a REIT is to buy shares that are publicly traded on a exchange. So that's like the, I guess, most common way to do it. The shares trade like any other security traded on a exchange, such as stocks, and makes REITs very liquid and transparent. Income from REITs is earned through dividend payments and appreciation on the shares. In addition to individual REITs, investors can trade in real estate mutual funds and real estate exchange traded funds, ETFs. So there we had two more indirect ways to invest in real estate, right? We have real estate mutual funds, then we have real estate exchange traded funds, which are ETFs.
I think there are various ways of doing it, of course. Um, However, in my opinion, I think the easiest way is to buy shares into a company that is actually owning real estate.
Right.
And that would be sort of an indirect investment, right? Because you own a piece of in a company that is owning real estate.
Yeah.
But yeah, I think that would be the easiest method from the ones that I know,
Hmm.
and from my experience. Uh, so
Yeah,
yeah,
yeah.
and then there are, yeah, as you said, mutual funds, uh, and funds, which would be, yeah, that would be a piece in multiple companies that own real estate.
Right. Yeah.
Yeah.
That's what's up. Then we have some pros and cons as well with the indirect investing. So so pros are that it is very liquid, right? Since you can easily convert it to cash, like stocks and so on. And then we have diversification. Yeah, it's a separate type of asset to invest in, right? And then we have steady dividends. And I think, yeah, I had somewhere in my notes that um, for a company to for its stock to be categorized as a REIT, it should pay like 90% of their income from the real estate that they own should be paid out in dividends.
Oh, okay.
I think I read it somewhere. We will maybe come back to that. And then the last pro that I have here is that risk adjusted returns. Well, yeah, I guess what they mean by that is or I don't know, I'm not sure. Uh, uh, I guess like if the market is suffering and like the company that owns the real estate like maybe loses tenants and stuff, I don't know. Maybe you will still like get some return, like get some dividends, but maybe it will be lesser. I don't know, man.
Risk-adjusted return on capital is a risk based on profitability measurement framework for analyzing risk-adjusted financial performance and providing a consistent view of profitability across businesses.
Meaning,
I think I have a shorter one here. A calculation of the profit or potential profit from an investment that factors in the degree of risk that must be accepted in order to achieve it.
Okay.
And then we have return on risk-adjusted capital.
Yeah.
Then we have a bunch of formulas and stuff as well. Uh,
All right. Well, I can go through the cons. Meanwhile, you look maybe.
yeah.
Uh, we have some cons here. So, uh, first con is that it has like a low growth and low capital appreciation. So the stocks and the indirect investing strategy. Then another con is that it is not taxed advantaged. So I guess you won't get any like tax benefits since you own the real estate indirectly, and you will get taxed as if you would just own stocks, which basically the REITs are. And then we have subjected to market risk. So I guess kind of goes together with what I said earlier with my guess of risk-adjusted returns. I'm not sure if they are correlated in any way, but so subject to market risk is basically if the company suffers some losses. I don't know if maybe a building burns down, or I don't know, something that would cause that um, yeah, they lose the value and the stock goes down, then you are the one that will take the hit, so to say, if you are invested in their stock. Then we have high fees. So I guess that would go together with especially mutual funds since they are managed by a person, right? So the fees will be higher. But I think you also said that wasn't there like a I'm not sure, like a real estate manager or something like that? I don't know. Maybe it's the I don't know.
Wait, real estate manager.
Yeah. Like I got a feeling that you said something earlier about this.
Yeah, like a real estate manager, like the one that is. So, for example, in a multiple family property, so if in an apartment building, you would kind of need a property manager or like a real estate manager to make sure that, it
For
works
sure.
properly and can answer your tenants if they need
Yeah.
help and everything and so on.
Yeah.
Yeah.
But how would that I'm not sure that would result in higher fees if you invest in, or maybe it would, maybe since the company has to hire a person that will be the manager, right? So maybe it could add to the high fees if you invest into a real estate company indirectly.
Wait,
I'm
wait.
not su-
Now I'm losing the connection here. Wait, uh so you said higher fees
Yeah, and
in
this is the con of indirect investing into real estate. I was going through the cons while you were looking for the risk-adjusted returns. Uh,
Yeah, I was looking at the risk-adjusted returns. So that's why I lost the connection. Uh,
yeah.
high.
But basically, with the high fees, yeah, I think you have to pay higher fees since, especially if you invest in mutual funds, which tend to have or they have higher fees than index funds. And my idea here was with the managers that since the company has to, hire somebody to manage the real estate, maybe that could be linked to higher fees as well if you invest into the real estate company, like indirectly, like you buy their stock and so on. But I'm not sure. That was just a theory of mine, uh, of the reasons why there could be like higher fees.
I don't think an employee would make such a big difference to the company's
Maybe not.
cost. Well, what it could be is that when it comes to mutual funds and some funds, they are actively managed by a portfolio manager.
Yeah, yeah, yeah.
And if that's made, yeah, if there is like an active, what would you call it? There was a special word for that. If you're actively managing it and, ensuring that is going as profitable as possible, then then the fees are usually higher
Right, right, right.
to those types of funds.
Yeah, for sure. All right. Have you found like anything short and sweet on risk-adjusted returns?
I had it here. Well, it's as I said, I was just thinking more about this definition, and it says a calculation of the profit or potential profit from an investment that factors in the degree of risk that must be accepted in order to achieve it.
Okay.
So it's basically a calculation which gives you the profit from an investment based on the degree of risk
Hmm.
that must be taken. So it's a sort of, yeah, risk to profit
Ratio or
ratio. Yeah, yeah, exactly.
mm,
Um, so yeah, that's basically what I would say.
right.
Um, and then there are like thousands of other different ratios, of course. Uh, but yeah,
Okay. I'm looking through my notes here, and then I don't know, but we have like kind of talked a little about like now my English. The grammar is on point, man. No, we've talked about the kind of the indirect way to invest in real estate, right? And also the direct way. And when I look on my notes here, I have like I don't know, I have five key ways investors can make money on real estate, which is also taken from the Investopedia A N Investopedia article, which we can maybe go through, yeah, when we feel like it. If
yeah,
you have like nothing more to add on indirect investing.
I don't have anything more to add now.
All right. Do you want to go through these, or should we just maybe
I think we can go through them briefly.
yeah, yeah, yeah. Okay. So, number one, we have talked about this like the whole podcast, actually, rental properties, and actually it has some pros and cons. Provides regular income, properties can appreciate. Maximizes capital through leverage and many tax deductible associated expenses. Cons: managing tenants can be tedious, potentially damage property from tenants. Reduced income from potential vacancies, right? Then second way you can make money through real estate is through real estate investment groups. So we had the rates. Then we also have um, I'm not gonna say this abbreviation in the word form. I'll just say REIGs, uh, which basically are ideal for people who want to own real estate without the hassle of running it. Uh, and Investing in the REIGs requires capital cushion to access to financing.
Yeah,
and they are much, yeah,
it's more like a group of people investing in one property. Um, it's like more like a group investment.
yeah. Even though, even though it's said here that REIGs are like small mutual funds that invest in real in rental properties. In a typical real estate group, yeah, group company buys a set of apartment blocks or condos, then allows investors to purchase them through the company, whereby joining the group. So, yeah, yeah. I think you understand what, right? Like what this means.
Yeah. Yeah, so it's like a group of people buying real estate. Um,
Yeah, basically,
yeah.
or like a but like it's sitting like typical, yeah, investment group, a typical real estate investment group, a company. Yeah, like, I guess they form a company, right? Then they
Yeah,
buy some real estate, and then they allow other investors to purchase them through the company, whereby joining the group. Uh, okay.
that would work like a mini mutual fund. I think that's one of I think Grant Cardone, which is a very well-known real estate investor. Uh, he, I think he does some stuff like some similar stuff.
Yeah, yeah, yeah. All
Um,
right. Yeah, I'm not gonna go into the details. Maybe we can do like a second episode on real estate or something. I don't know. But yeah, some pros are more hands off than owning rentals, and provides income and appreciation. The cons are vacancy risks, fee similar to those associated with mutual funds, and that the real estate is susceptible. Damn, susceptible to un I don't know what this word is. Unscrupulous managers. I guess bad managers.
I think so too. Yeah.
Okay, so third way to make money through real estate is house flipping, which we have talked about, and also kind of the pros and cons, right? Which are, yeah, ties up capital for a shorter period of time, can offer significant returns, requires a deeper market knowledge. Hot markets cooling unexpectedly can be like a big risk. Then we have fourth way to make money through real estate is real estate investment trust, which we have also talked about, and yeah, it's basically like a stock that you invest in, right? Uh, yeah, something like that, something like that. I don't know if it was necessary to go through these four in the end, but um, at least I personally got or actually, all of us got a small recap of things we have talked about. So, uh, yeah, there you go.
Yeah, I think we got a very good overview over over the real estate market, so to say.
Yeah. I think next time maybe we should kind of come together as we have done in the past episodes, where we know exactly what we both are going to talk about. Because I felt like this episode was a bit unstructured at time, or like it was a good discussion, but uh yeah, maybe it would be, or I don't know. What do you think?
Yeah, it was a bit fuzzy at times. I
Yeah,
can agree.
yeah,
Yeah.
yeah. So that's
Yeah.
a improvement for next time, guys. We will take notice of that. But yeah, I don't know. Do you have any last comments about real estate?
I don't have any last comments, no. I don't actually.
Okay.
Um, just I think it was just a really good and interesting read about it.
For sure, yeah.
Uh, and yeah, it was good that we went through it. And yeah, as you said, for next time, I think there will be more improvements, and I think hopefully, or I hope that, and actually, I'm sure that we will manage to sort of niche down into something more specific. Um, because now it felt like we, as I said, we went through the whole thing, the whole big market,
Yeah, 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 yeah.
like the whole idea concept. But yeah, maybe next time we will be able to focus on something more specific, or make
Yeah,
several episodes about, maybe one episode will focus on residential
yeah,
properties only, and so on. Yeah,
for sure, for sure. Yeah, and yeah, I totally agree. Uh, I think this was a good start to kind of kick off the real estate, the more niche real estate episodes, as we now covered like the main types of real estate you can invest in, and then also some ways you can, or we covered some real estate types that like exist, the residential, the commercial, the lands and the churches and everything. uh, and yeah, and also some ways that you can invest like in all those properties.
yeah, maybe you can't really invest in churches, and
You can always find a way, man. You can always find
yeah, that's true. That's true.
a
I mean, you sort of when you yeah, I don't know how taxes are in different countries, but okay, now I'm feeling that we are going on a completely weird way here, but
You
it
just
feels
have to talk to the priest and you will get some.
yeah, I mean, in some countries, I think that you're indirect investing or at least giving money away to churches. So yeah,
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 yeah, yeah, yeah, for sure.
yeah, yeah.
All right. Uh,
Right.
and that's that.
Det är fan sant. Körde alltså. All right, ladies and gentlemen, thank you for listening to today's episode of Philosophy Culture. And we really hope that you gained some knowledge about real estate, even though this episode was, I don't know how long, and a bit fuzzy. But yeah,
Yeah,
I hope that it will somehow help you to uh, understand more about it and navigate life's spin.
for sure. And yeah, hope you enjoyed this episode. And this will be like a catalyst to even more, uh, specific episodes in the future. So stay tuned. And yeah, I don't know what more to add. I hope you have a good day, good night, and until next time, comment down below as well.